Stocks ended mixed Tuesday as investors kept their focus on the growth trajectory of the U.S. economy and awaited key economic data due out later this week, including minutes from the Federal Reserve's meeting last month and the June jobs report. The Dow slipped 0.4%, while the S&P 500 closed up fractionally, but the Nasdaq surged, ending 1.75% higher. Michael Vogelzang is Chief Investment Officer at Cap Trust.
Clearly, the market is sort of looking at inflation as old news, and that worried and is worried that the Federal Reserve will continue to tighten interest rates and financial conditions so much that we end up in a recession. So there's a lot of debate, a lot of discussion around whether or not we're either already in a recession or one's right around the corner. And there's sort of pros and cons, but today's market activity is very much focused on that. We see energy down a lot, which is of course very cyclical. We see other cyclical industries down, materials, and we see things. Actually, the Nasdaq is up, which is typically thought of to be less cyclical. And I think the most important question for investors to decide as to whether or not Apple and Microsoft and Facebook and Amazon and Google and so on actually provide a shelter in an economic storm. And I think my guess is that over time, as the economy continues to slow, that we're going to see a little more demand for those stocks since they've sold off so much.
All of those big tech stocks surged Tuesday as Apple, Microsoft, Amazon, Google parent Alphabet, and Facebook owner Meta Platforms lifted the tech-heavy Nasdaq. Energy stocks hit 5-month lows as recession fears darkened the outlook for oil demand, and the materials sector was at a more-than-year low as a slump in metal prices hit mining shares. Finally, shares of Uber Technologies rose more than 5% after launching its ride-hailing and platform in Israel as it continues to expand globally.